Hi, this is Randy Finney with Right Side of the Chart. This is a mid-session update from Monday, December 20th, 2021. I'm going to do a brief update on the equity markets, and then I also want to do updates on some of the other things I've been watching lately, as well as a new setup on natural gas, new trade idea. It's actionable. Crude oil, lumber, new one there. Sugar update, and gold and silver. All right, let's start out with the equity markets because this is when traders make money, both active traders and swing traders. It's when volatility spikes, and we've certainly seen that in the last few weeks, or really since the correction started. But all right, let's just loop forward to where we're at today. I won't do too much of a recap. I've done a lot of that lately. Let's keep the video relatively brief and streamlined here. Most importantly is where we're at right now. This is a 60-minute chart of QQQ, and let me change some of these tool colors here. All right, so you have the T2. Remember, we had sell signals here and here. I told you I wouldn't give a recap, but this it kind of ties into that. We went down and we hit my second target right here back in early December, and we bounced from there. And we're back there now. So that was support then. And if I had it support on the way down before we even hit it, the fact we had a perfect reaction and big impulsive bounce off that level completely helps to validate that as a significant support level. Okay, so again, it was support before we even got there, and now it's even quote-unquote better support, if you will. And we're there now. So that's the takeaway, and that's that post I got out to you this morning with the futures, about roughly 378.44. And the other thing is we have this on the 60-minute time frame here of QQQ potential divergence. In fact, that's going to be the common theme here. I'm going to tell you that nothing's changed. We've had a lot of sell signals in recent weeks, both on 60-minute time frames as well as daily and even weekly time frames. However, to me, as a rule, when I start seeing positive bullish divergences, especially when the primary trend is still bullish, I hope that's not confusing. The near-term trend, short-term trend is bearish, but the intermediate and the longer-term trend are still bullish. So when I get these 60-minute divergent lows, in fact, the divergence is all the way from here to here. Here's your divergence right here. It starts at this point on QQQ. And so when I see that, it tells me, hey, you can't be aggressively short. In fact, there's an opportunity to be long there. And so I still maintain that you can reverse here, an active trader, and try to game a bounce. Where to? Well, you can see the same levels in reverse. I'll give you one other line right here. I think this is, we could carry up to about right here. So let's just say I'm going to move this one down now. I'm moving these lines just because things have changed. We have a couple reaction lows there. So about 382, that would be a minimum bounce target. But again, if that happens, what's going to happen here, this divergence right now is what I call unconfirmed because we have a potentially higher low, but the PPO is still pointing down. We need to see the PPO cross. Now, if we do, we're going to have the first divergent low on the 60-minute time frame on QQQ since back here. And the last time that happened, strap on and hold on. We were short at the time, or at least the target was just hit. I was holding out for my next target. We reversed a little shy, and we had better than a 16% rally in QQQ. So keep that in mind. It was a bigger divergent low, so that's it. I don't want to beat a dead horse. I just want to say there's that potential. If you want to game a bounce here, go long, whether you want a quick short-term bounce trade or if you're longer term bullish and these divergences play out, that could be good for a move potentially to the next highs. Now, as I've said before, any marginal new high in the coming weeks here shouldn't change much on the longer term charts, but it could. It could negate the sell signals we got on the weekly and the dailies, those bearish engulfing candles, which would be negated if we take out the recent highs, and some other things. All I can tell you is the charts are dynamic. They change day to day, week to week, and so therefore we'll take it one step at a time. Let's just focus on today. That's why I'm doing this. Oh, by the way, guys, I'm going to be out tomorrow. Kids are on vacation. My oldest son, teenager, I've taken him and a group of friends out by boat, out camping to an island that's pretty far from here. I got to drop them off and pick them up a couple days later. So we're doing that as soon as the cold front here pushes through tomorrow morning. So and the weather clears up. So I just want to let you know that I may be around a little bit in the morning, especially depending on how the weather goes, but I'll probably be out most of the day and almost certainly all of the afternoon. And then we'll pick back up Wednesday. And I will be here today, so anything else, I'll do another video update. Okay, enough on that. Well, it's a lot of time on QQQ, but important stuff. We're going to look at SPY, 60-minute chart. No more divergence here on the PPO, so I'm going to take this line away. For now, we're not going to have divergence anytime soon there, but we do have it on the RSI. We have roughly equal lows and lower lows and prices. So there's RSI divergence, and SPY is at support roughly right around these previous lows right there. Remember, we're coming off a bigger divergent high. So, I mean, there's cross currents right here on the shorter term charts. There was that divergent high, effectively a double top high on SPY right there. Remember, SPY came up and tried to make another run at that to break out the highs, got rejected, and got rejected pretty impulsively. So overall, I still think in the coming weeks and even days we're going lower, but we need to take out these lows today with conviction, not just a little brief stop raid pop. So that's it. There it is. And if you're looking to be long, well, I just showed you where you can go long right here with a stop somewhat below, maybe below the recent lows. And if you're looking to short, you want to see these lows get taken out. And I will say this, before I move on, as far as those divergences go, and I'm going to get to the futures here in a second, it will be a change of character. If these bullish divergences do not play out for a rally, and I'm talking not just a little 2-3% quick trade to those short-term targets, I'm talking a bigger run, maybe up here at least to this trend line, if not more. If that doesn't happen, that will be a change of character, and that's one thing I look for in the market, because again, these 60-minute divergent lows, just about everyone that we've had since the Fed stepped in when COVID first hit back in March of 2020 or February of 2020 and really started taking the markets down, they have been the catalyst for the next big run up in the market. So if they fail to materialize, that is my point I'm trying to make here. If these fail to materialize and we head down, the divergences are taken out, then that's going to be pretty darn bearish in my opinion, and then we'll probably get to that point where I've been talking about, warning of that waterfall selling, and then hit my if things get ugly target on the futures. Before we go there, let me just do an update here. Here's QQQ starting to crack back. If you take off all the lines right here, what's probably most significant, here's that previous high. Remember, we broke out, we back tested it here recently, back tested again, and we're falling through there. So we're in a precarious position, but if you look real tight, we're almost exactly where we were at these previous reaction lows. So the Q's hanging on to support by a thread. Again, it's that same level I showed you this morning. And on SPY is actually back testing right here that same previous high. When you look at, this is a daily chart that we jumped to, there was that previous all-time high in SPY, pulled back right here. We ran up and broke out, back test, a little back test right away, checked it again, a little brief momentum fueled overshoot, but that's fine. So that was, for all intents and purposes, a successful back test, and we're back testing again. In fact, we're right at that level right now. I mean, literally right there again from the previous highs back in late August, early September. So this is a key technical level. This is a battleground between bulls and bears. You bounce up, I'm talking a sustained and rally up, bulls win. Otherwise, we fail that breakout, we're going down to where I still think we are, and that is we're going to visit, I think, the 200-day moving averages, which on SPY are down here. They come in right here, the 200-day exponential and simple moving averages. That's a minimum target, and we probably overshoot them and then park on there. Same with QQQ. That's where I'm looking at right now on QQQ. Again, if you can't see them here, there's the 200s are right about there roughly, and that would take us down to that 360 target. But to get there, we got to break support. So that's that. Let's move on now. Let's look at the futures real quick. Even though I gave you a chart this morning, really no change. Looking at ES. Okay, so what's the important things to note on ES? Well, you have an uptrend line here off the late September, early October lows right there. Yeah, it's about beginning of October. A nice, well-defined trend line. 3 reactions early on, another reaction recently with a divergent low. You can see there's that bullish divergence you have to be careful of if you're short, or look out for if you're a bull and you're looking to go long. And that gave us that nice rally. And that put in right here, a divergent high, just like this divergent high. So this is it. These are the swing trading frames. Now the divergence at this point, and we'll note it's only on at this time the RSI. Remember, like to see them on both indicators, like you had negative divergence on those highs, negative divergence on that high, positive divergence on both indicators right here at that low. Right now, we do not have divergence on the PPO. It's burned through. However, we're in close enough proximity to this trend line. We're, I mean, a hair below it if you really want to zoom in. But again, marginally, and that could just be a stop clearing move. In fact, if the bulls regain it, that's going to be bullish. Where are the bounce targets? Well, the arrows I showed you this morning, at minimum right here. Gosh, I need a straight line tool. I'll use this arrow tool. Right there, that's about, what is that, 4,600, about 4,602 up to about 4,613. So 4,602 would be, again, a minimum bounce target if you're trading ES. And then you can see that next resistance up there is about 46.53. But again, if you are a bull and you think this market's going to rally into year end and beyond, then step in here with stops not too far below. If you're a bear and you want to see it break, well, at minimum we're going to probably drop down to 44.64. That's the next support right there if this level does not hold. So as of now, again, you have my post from this morning, active traders. I think you can be long right here with a stop. Somewhat, you got to play it by, you kind of play it as it comes here because we're just marginally below, slightly below those lows. No impulsive selling yet, and so it can go either way. That's where I'm at, and I'll continue to update this later today, no matter what we do. All right, next one up. 11 minutes. Okay, we've got time for the rest. So let's talk about the small caps real quick. Certainly a trade to be made there. This is IWM. This is a 6-month chart right here, 2-hour candles, and we had a nice trend line right here, right? We had the initial reaction, another reaction there, a cluster of them, a couple more reactions, one there, and we broke it. So on looking at that from that perspective, this breakdown right here, that's a breakdown, and that's bearish. However, if you want to play the glass as half full instead of half empty like we just did, well, you can say, well, here's a downtrend line with positive divergence right here on the indicators on this 2-hour chart, forming a bullish falling wedge pattern. And maybe this, and I will tell you, respect it, because we do break out of that downtrend line right here, two things are going to happen. Number one, that in itself will be bullish, a downtrend line breakout. Let me change something here, do that align tool. So we have the downtrend line right there. But we'll also, if to get up there and break above this trend line anytime soon, we're going to have to recover this trend line. So if that happens right here, that's going to be this will prove to be a false breakdown, aka bear trap, and then we could run up there. Run up to the uptrend line and then potentially break out. So let's call this what it is. That is a potential bullish setup. It's untriggered. These divergences may get burned through. We are below the trend line, so you have to be very careful right now. If you want to take things on face value for what they are at this point in time, this is a breakdown. This is a sell signal on the small caps. However, it's not an all-in kind of sell signal because you have these reaction lows from back here, and we haven't taken that out. So if you look at it longer term, here, let me show you another board. This will make more sense. Look at IWM on a daily time frame, and you can see this is that level I've showed you. We've been in a multi-year trading range. The small caps look very toppy. In fact, they had a failed breakout above the trading range, a failed breakout to new highs, which also at the time it did that put in big negative divergence. And again, so this and everything I've showed you lately on my longer term charts, they look pretty darn bearish. Bearish where I think we're looking at an imminent and likely, not guarantee, I shouldn't say the word imminent, but a likely drop in the markets that should be at least 20% if based on what I'm looking at on the technicals. That would include small caps, large caps. IWM, if that trading range cracks and it's anything but a little whipsaw, I don't have a single target to 170, and I would put good odds that's where the small caps will end up, and that would be a drop of about well, there it is, about almost 19% from where we're at now, and from the highs. So when I'm referring to a 20-30% correction, I'm talking off that would be the total correction. That'd be about a 30% drop in the small caps. So there it is. Trade it like you like. IWM, here's a 60-minute chart. I already showed you RTY, which were the futures. And again, you have these big divergences building, and if they play out, they would indicate a pretty strong rally. So we could see a year-end rally. It can go either way, guys. I wish I could tell you with certainty which way it's going to go. All I can tell you is, keep an eye on these patterns, these developments, and react. If you are short and bearish, don't, if this starts to play out and you start to recover levels, that we broke down, resistance levels, former support levels that are now resistance, we break the trend line, that's nothing but bullish. So you gotta watch that stuff. So that's it. Let's move away from the markets now. You guys know my thoughts. Right now, the case can be made that we're looking for a possible bounce, and if that doesn't materialize and you're long, you want to get quick, reverse, cover those longs if if these support levels that I started with, especially on the S&P 500 and NASDAQ 100, if they don't hold and we have an impulsive drop down through there, a solid close, especially today we closed well below those, and then and especially if the divergences get taken out, then we're probably going to get to, and then I'll get off these longer, or these index charts, we're probably going to get to this. I'll go back to my 6-month 2-hour candles, and I gave you a while ago my if things get ugly target right here, which is down around 14,424 on NQ. So you can see it right there. We're bouncing. We've still got the well, at least on this time frame, a little bit of divergence. We break that. Yeah, there's going to be a stop along the way, a couple stops probably, and little hiccups, but again, that's where I think we'll go, and I think it'll be a pretty impulsive slide there. I think we're going to finally get to that, what I call point of recognition, where the bulls start to say, hey, something's wrong. This isn't your run-of-the-mill pullback we've had for a while now. And remember, the macro picture is starting to change with the easiest Fed in the history of the Fed starting to slowly dial back and turn the ship the other way. So the market, yeah. Do I think they are too slow on their course to reverse to a more hawkish stance? Yes, but it doesn't matter. The fact is they are reversing, and one thing about it is there's trillions of dollars in the market. There's hedge funds, pension plans, individual investors, and do they want to wait to the last minute? No. So if I ran a huge pension plan or hedge fund, and it took and you can't just turn on a dime with your positions. You can't dump if you have a huge stake in Apple. It takes a while to get out. You want to get out before the herd. You don't want to wait till the last minute. So I think we're already starting to see, well, I know we're starting to see profit taken in those big market leading FANGs and tech stocks and everything else. That's why the market's correcting. So let me say no more on that. Let's move on, and I'll go through these others real quick, because I said I'd do it in this video. Otherwise, I should have kept this one limited to the equity markets. But NG, natural gas. This is a 6-month chart looking at 2-hour candles. You'd probably see the same thing on a 60-minute chart. Nice divergent low. This is what I love to see. We were short nat gas here and here. We had right there. We had negative divergence, divergent high. We had other sell signals. There's a wedge, and been working lower. We had positive divergence there. There was a little rally, and another leg down, and here it is, bullish divergence right now. So natural gas, based on that alone, and there is some support there, and I have support on my daily chart. I don't have that queued up right now, but I have a long-term daily chart with natural gas as support. So just I like to spread it out. Index positions on the stock futures, different commodities, if there's any stocks that look good, bonds when the time is right, crypto, the more asset classes and different type instruments you can spread your bets in, the better off you're going to be. It's going to help to cushion any big moves if any one position goes against you. So that's one that I'm liking right now. It's not a screaming buy, because what I really like to see on that gas too are trend line breaks or price resistance. All I have for you there is positive divergence. So if anything, that may give us a little more upside in that gas. Let's talk crude oil too, because crude oil I've been and remain longer term bearish on, calling, like the stock market, I believe to be a major top in place. And so far that's been the case. That was the major top. We had pretty much a triple top here. This is a 60-minute chart, crude drop. But like everything, nothing goes down forever. We had nice positive divergence there recently and had a nice rally from it. But what happened most recently is we were rejected. Here's a downtrend line I gave you off the recent highs, and we got rejected impulsively so far. And longer term, I remain bearish, and I've already covered some long-term targets. This is just a 60-minute chart showing you what's happened recently, and that was a break of this 69.30 level right there. There was resistance right here. They broke it, ran up, hit the next resistance at 72.87 plus the downtrend line, dual resistance there after a few checks at 72.80. The sellers or the buyers, the bulls could not overwhelm the sellers, and boom. If they did, we would have gone up to this level. But that's not what happened. So what happened here, we broke down, and that was an objective short entry or add-on right here on this recent break. And now at this point, any kickbacks to 69.30 and or the downtrend line would offer you objective short entries. Targets are much lower beyond this low. There's no divergence to worry about right now. That doesn't guarantee we can't rally, but I'd feel comfortable with this one being short. So short crude and even long, maybe a mild position in natural gas. Nothing crazy right now. And lumber is a short. Lumber broke down today. Nice. This is a daily chart here. We had a nice clean up trend line, all the way back here. These are thin candles because I rolled these recently. This rolled over to I've rolled up to the March 15th. The volume was drying up in the January contracts. These are the March contracts. We had a positive divergence right there. You can see it on the indicators, bullish divergence. That led to this rally right here up to this point. But then since then, what you look at are these high-level bearish PPO crossovers. See right here, PPO was in bullish territory, meaning the orange line, the PPO line was above the signal line. Boom, crossed right there, and that was catalyst for this correction right here. And right now we're looking at the next potential cross, but more importantly broke trend line support. So I think it's an objective short entry. Where does it go? I'd say probably right here. Let's say, especially if the market corrects, probably pull back to about 820.59. That's going to give you about a 20 little north. We'll call it a 20% drop if that target's hit in LB lumber futures. This is what it looks like if you go down to hourly candlesticks. We were just on the daily candles. We had this price channel there, negative divergence building, and then pop. There's our sell signal today. We gapped down below the uptrend line or price channel, and 822 right there. There's your target. Alrighty, let's see. This darn pause function. Sometimes I click the pause button on the videos I'm recording, and the click doesn't take, and so I don't think I was unpaused. I just covered lumber on both daily and 60-minute charts, so I'm going to do it again. Anyway, lumber, I have a sell signal today. Right now, objective short entry. We broke down here below the 60-minute uptrend line / price channel. There's a rising channel. We had, as I like to see, negative divergence building at the recent highs. We say divergence is not a sell signal because you had it here, you had it here, you had it here. But what is a sell signal is a break of a nice well-defined trend line. So that's it. My price target is 822. You might want to cover a little hair below that. Hair above that, I'm sorry, and you're looking at about a good 20% drop to get there. That should be good lumber for a 20% drop. And I also just covered it again. I apologize if this was covered in the video before I hit pause. But this is the daily chart. Again, I'm on the March contract now. The Januaries have dried up, so you might want to use the March contract. There it is. You can see nice clean uptrend line. You see a potential, not yet confirmed, but a pending bearish PPO crossover high level. Last time we had a bearish PPO crossover was right there, and you had that drop. Back here you had positive divergence. You can see building, and you got that rally. So, and also there was another high level bearish PPO crossover led to that correction. So there it is. And there's my same target. Whatever, use the target I gave you on that 60-minute chart. It's again, it's about 821, 820, 820 to 821. And again, it measures down to about a 20% correction in lumber futures. And I've always mentioned this, but if you're new to the site, there are, to the best of my knowledge, there's not an ETF or ETN out there that directly tracks lumber prices. You've got to use futures, and it's a pretty good sized contract. Wood and Cut are two ETFs that hold timber companies, and they will roughly track lumber prices. They hold timber and forestry companies. But again, if you want a pure play, don't believe there's an ETF or ETN that tracks lumber future prices. You just have to use LB if you want to trade this one. And sugar has effectively hit my T2. I've just shortly before the video, I got an order that I had a limit order to fill. Remember, when I've been doing more of these, what I call unadjusted targets, it's just much more efficient for me to throw out more trade ideas. And instead of doing those adjusted targets, I used to do T1 equals. And so, if 1845 is the support level at T2, you want to cover a little bit below it. Now we'll probably hit it. That's the actual support, but again, I think it makes sense to cover just a hair above it. So for all intents and purposes, we've hit the target there. This one was just such an easy trade lately. Again, I haven't marked each and every one, but you look at these high level, when I'm saying high level, below the zero line, high level bearish PPO crossover. So there was our last sell signal. It got us in this short, plus we shorted that run into 1984 resistance. So a nice trade. We had a bearish PPO crossover there, one there, one there. All these little tradable trends, and the same thing on the bullish crossovers. Those are where you rally. So if nothing else, trade sugar using this PPO in conjunction with other things. I wouldn't solely go long or short based on bullish and bearish PPO crossovers. Again, the bullish ones you want to see at low level down around this line right here. That's where you want to step in and go long. You want to go long. You want to go long. And here, up here, you want to go short. So that's it. That trade's over. I don't know where it goes from here. If you want to stay short, just lower your stops at this point. If it breaks T2, it may continue down. But to me, it was a kind of in and out trade. I've been in hit and run mode with commodities. That's where I think I know it's much more efficient than trying to hold a swing or trend trade because most ag commodities and commodities in general have been moving sideways for months now in these big sideways choppy ranges, but they're tradable and swing tradable in out, week, 2 weeks, 3 days, whatever it takes. Move on to the next one. All right, speaking of the next one, that would be I'm going to give you updates on gold and silver, and we'll move on. Still like them. Gold and silver looking good. Also, again, a hedge to a portfolio. If you're short equities or long equities, it doesn't matter. It's just a different asset class. We're still coming off, most important thing, we're coming off those big divergent lows at support. We had that nice spike there, pulled back. We're actually right now pulling back to support. So as I do this video right now, I think this is an objective level to add to gold. I'm going to put a line right here. Why did I put that line there? See these reaction highs here? That's it. We had some support back there. It's a level. It's what I call a minor support level, and that's about 1792 right there. So that's it. And the fact we're coming off this divergent low right here, first impulsive leg up, usually you're going to get corrective waves in there, and so we could swing on up here, 1819, 1940 next targets. And you can take it as a trade with a tight stop below that level, or just keep your stops wide as an investor or trend trader or swing trader, and keep your stops below the recent lows there. So that's gold, and silver will usually follow, not always, but normally, and has been lately. Same setup there. You had nice big divergent low right there, impulsive move off there, hit that 22,619 resistance / target. little pullback here, maybe a little bull flagging action, and so if we get another leg up, 23.10 and then 23.80 are your next targets on silver. And of course the euro and the dollar help to confirm that. I'll wrap it up with those two. E7 euro futures. We had this bullish falling wedge right here. We broke out, kind of been moving sideways for a while, and we've been dancing on this 112.54 support, including that most recent tag. So we really want to see the euro break above that top of that trading range, about 114, and if so, then we'll hit my target up here, my near-term target, intermediate-term target, about 115.70. If that plays out, as I suspect it will, that should be bullish for both gold and silver. Okay, just under the 30-minute mark. Let's wrap it up here. This has been Randy Finney with Right Side of the Chart. And if anything changes or if I missed anything that stands out as a trading op, I will get it out to you later today, as well as an end-of-day update today. And once again, I will be away from my desk most of tomorrow. And of course, anything big happens tomorrow. If I don't get anything out to you during the day, I'll do a wrap in the evening when I get home.